All right, everyone, welcome. Oh, my green screen's gone. Welcome to another live strategy session. Altos Trading, this is Richard Van Rich here with Jeff Tompkins. I'm really excited to have you guys with us here today. Hope you guys are doing great. We got a lot of good information to go over tonight. I'm really glad to have you guys with us on, and awesome. Someone says, what should I help in my pajamas? Okay, here we go. Anyways, if this is your first time on our session, you'll notice your microphone's muted. That's so we can all hear Jeff talk. If you have any questions at all, you can put those in the Q&A box, and we'll get to those throughout the evening tonight and also at the end. If you have any questions about your accounts, access to trade trend, subscriptions, anything like that, email support@altostrading.com, and we'll get to those tomorrow. If you have to hop off for any reason, this is recorded and will be available in the members area later tonight and on YouTube by tomorrow. Before I bring up Jeff, let me just read a disclaimer. Trading securities and option involves risk. Prior to buying and selling an option, investor must receive a copy of characteristics and risk standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to time-critical nature of trading, broker fees, and activity of those subscribers, there's no guarantee that subscribers will mirror our performance, and performance numbers shown are based on trades users could enter based on the trade signals. Great. All right. Well, it's like you guys can hear me. You can see my screen. So let me pass it off to Jeff. So Jeff, if you want to grab the microphone.
All right. Hey, guys.
There we go. It came back. I was like, I saw all green screen on mine.
Yeah, we're in the studio. Sorry. There's malfunctions in live events, right? So
I do have pants on, so it's a bonus.
You'd have to prove that to us, but yeah, by the way, Richard got in a bar fight last night. Do you want to show him your
first little, what is the first rule of Fight Club? You know, watch out. I look like the Hulk. I got some wrist surgery this morning.
That Fight Club wasn't real, right? It was all in his mind, right?
That's true. It's true.
This was real.
I think it was
a real bar fight.
Well, that's what happens.
No, all joking aside, Richard's a champ. He had surgery this morning and is still here with us. So
that's right. With my bionic hand here, it's huge.
Goes to show his dedication.
That's right.
Yeah. So, all right. So welcome everybody. And let's start out with a joke from Moshe, because I just saw this in the chat and it's a good one. He said, Groucho once said, I once shot an elephant while in my pajamas. How he got into my pajamas, I'll never know. I'm glad you used elephant for that.
Yeah.
For the subject. All right. So, yeah, good evening. Lots of people on tonight. Cool. All right. So, tonight, so we've had a request, a special request from a member, and I'm not sure if an attendee, because I haven't looked through all the attendees or not, but for a topic tonight. So, are going to cover that, focus on it. And I appreciate anyone, if you guys ever want to talk about something or, it's relevant for the current market conditions, or, focus on a specific strategy or anything of that nature, let us know. We do take it seriously, and we'll cover that. So we got one tonight, and we'll start out with our market overview, talk about current conditions, and the request was to focus on volume to spot institutional buying and selling. So we're gonna use that as a focus tonight, and I think it's a timely topic, because there's been a shift in the market, and there's obviously a lot of buying pressure going on right now over the last week or so. So I think that's going to be very timely and relevant. And then we'll leave as much time as possible to look at symbols that you guys are tracking or want to hear our analysis about, and wrap up with a Q&A. So let's go ahead and flip off our cameras and get over to our platforms here. So I'm not sure if we have an update yet. Let me check on Zillion.
Yeah, that person who had that question is actually here tonight.
Oh, good.
Yeah.
Excellent. I said, yes, that's me. I'm here. So yeah, our data is not updated yet, but we'll come back. I want to demonstrate it in Zillion, and then is because Zillion utilizes trading view charts, and a lot of our members use trading view, but pretty much everything that we're going to cover can be done in virtually any charting platform or broker platform. But in the meantime, we'll go over to the broker platform and use that for our market analysis. So let me. So a couple significant things to watch here this week. So we've had buy signals from trade trend here, right, on February 25th and then March 17th. What's significant today on the S&P is that although, and I'll point this out, there are two very significant swing lows or demand points where there was buying pressure off of roughly around the 4,500 to 4,550 level. And we're likely going to hit some resistance around there. And in our last session, I talked about the double bottom, and I suspected that we would bounce off of that, move back up, and then encounter some challenges with resistance, and that's happened. So I guess I'll pat myself on the back for that. But we've gotten to that point now, and now we have to be a little bit cautious, but also watch for opportunities for more buying in the market, because if we can get past this 4,500 to 4,550 zone on the S&P, although there is one more level that's not far above that I'll emphasize, but so it's going to be a little tricky probably in this zone. But if we can get past that, I think that we have a good chance of over the next week to 2 weeks seeing more buying in the market. But this was a really big bounce off of the 4,150 level. So if you hadn't attended our last sessions or were aware of this major support level, or if you're not a Zillion member and don't monitor the commentaries where I post these levels, you may not have been aware of them or notice them, but there was a lot of buying pressure off 4,150 on the S&P, and a bit of a parabolic move over the last 6 days, with a little bit of a stall in yesterday's trading, mainly due to Powell's remarks about being more hawkish with raising Fed rate. So the expectation is there should be probably roughly 7 rate hikes this year, and the expectation being that most of those would probably be 25 basis points, a quarter percentage point in the interest rate. But yesterday he said that there's a very good chance that if necessary, and it probably will be because inflation's out of control, that could be a 50 basis point hike. And that's, of course, is going to scare the market. And there was some volatility around that yesterday with basically a close near the open. So the good news is that the fear that was caused in that announcement was short-lived and driven back up to the close by yesterday's market close. And then today there was more bullish price action. So that could actually help. Just having that clarity could help with bullish sentiment. But the fact that we've made this parabolic move off the 4,150 level, there's likely to be some retracement or stalling at some point, right? And so that's what we want to keep an eye out for. So let's go ahead and because I have trade trend on here, it's flattens out. Let me, actually, we really have enough price data here to make a good analysis. Let me just get my drawing tool to mark these levels. So again, the buying pressure was off 4150, and we identified that in previous live sessions over the last couple of weeks, and that has really, I mean, kind of double bottom, but somewhat of a triple bottom even. So we had the rebound back there in later February and then earlier March. Not much of a move to the upside, but a bit of a retracement. But again, another bottom there mid-March. So from there, we've seen a lot of buying pressure, and we're going to be looking at volume tonight and how that relates. It's a bit tricky to use volume to time, shifts in these types of sell-offs, or after there's been buying pressure and the market's moved back up to identify a reversal. But it's a good tool, and when used in combination with other tools like trade trend, it can be valuable. So interestingly, there was a decrease yesterday, even though the open and close was near the same price in volume. But the problem with standard volume is it doesn't really tell us who's buying and who's selling. So we're going to look at some different types of volume tonight to figure that out. So let's see. So the good news is today, this was a major resistance to overcome around 45.75. And we got through it today. So that's encouraging for the near term. So you can see that past resistance became support. Price came back down, retested that zone, and didn't ultimately break it until the sell-off in January. And then saw a lot of volatility right in January and February, broke through, came back down, retested. Ultimately, that 44.75 level didn't hold, and broke again, came back to the retest, and then sold off from there. So the 45, or I don't know why I keep saying 45, 44.75 is a strong both support and resistance level on the S&P. And that was broken today with a strong close at the end of the trading day. So that's good news. But our resistance, overhead resistance, is still significant. So if you notice where the high traded today, so 4,500, and the good news today too, in regard to bullish sentiment, is we closed above 4,500. So that's a century mark and a good sign. But if you look at the high today on the S&P and what it coincides with in terms of support and resistance from the past, back to mid-December of last year, we have a major level there, right? So we've seen price break through, come back down, retest, and move up, and then it didn't get a whole lot past that 45.25 level, quarter century mark, before we hit the last all-time high in the S&P, and then have gone into this change in sentiment of the market and have never come back to retest. So that 45.75 level is going to be very significant. So tomorrow, since that was kind of the high from today, let's see what the exact high was. Sorry, 45.25. The exact high was 45.21, or almost 45.22. So 45.25 is going to be the level to watch for tomorrow. So if we get through 45.25 tomorrow and close above it, then I strongly believe that 45.25 level will hold, and we will be looking at 4,600 as our next major resistance. And that's the one I'm most skeptical of breaking, especially if this parabolic move continues up into that level. So key takeaway is there's a strong zone here that we need to be aware of and not be buying into this zone until we have more clarity around whether these levels hold. Because this 4,475 to 4,600 level is in the context of this parabolic buying pressure off of 4,150 is going to be a challenge to break through. So what we will likely see is some degree of retracement or rejection out of this zone, or a complete, very strong selling pressure off of it, a complete sell-off from this zone. The only way we're going to really shift our sentiment from bearish to bullish is if 4,600 breaks and sustains. And, then we're looking at getting back up into this zone, the 46 to 4,800 level. But right now, and hopefully you guys attended our past sessions or have looked at our market commentary in Zillion, the real buying opportunity was down here at 4,150 and prices moved off that level. So at this point, just be cautious, and we may see some consolidation between 4,475 and 4,600, but pay attention to what the price action is in this 4,475 to 4,600 zone, because if it serves as strong resistance and price rejects it strongly and moves back down, then that's just further a confirmation that the bull market is probably over, and this is kind of over exuberance or irrational buying, just because we often see that when we kind of get near bear market territory from peak to trough, and that's what's happened. So it's probably just a short-term buying, and as we start to look at volume here shortly, off that level from institutions, because in order to create this magnitude of move up in the market, this is actually, and this was part of the question for relating to the request for the topic tonight, is in order to drive this up, this is probably all institutional buying. And institutional meaning, hedge funds, mutual funds, managed money, insurance companies. They're all major players in the markets that can drive prices up this significantly. And typically the mindset here is that they're just looking for buying opportunities where people, mostly retail traders, are unwinding positions, panicking, kind of panic selling, don't want to expose themselves to further losses. And when that unwinding occurs, it creates an opportunity for buyers to come in because the liquidity is there to shift that supply and demand curve. So that's ultimately what creates these strong moves in the market. And so they should, most traders or investors will look at those and not realize that, and become kind of have like narrow-sighted vision about what's happening and want to get into it, and that's where they get trapped. So when we see this occur, it's not a time to get overly optimistic. We want to actually be cautious once we get into these resistance zones. So right now is a time of caution in this 4,475 to 4,600 zone. And short term, the level here is 45.25 on the S&P is resistance. So short term meaning like starting tomorrow into probably through Friday of this week, and maybe into early next week. If this breaks, then we have a much higher likelihood of moving up into 4,600. But 4,600 is going to be a very strong resistance area that will be difficult to overcome. So these are levels to be watching for how the market reacts off of them, because if we see a strong move off of those, that's again institutional influence that so much money has been dumped into the market to move prices up so drastically off that 4150 level that once we get up into a strong resistance zone where there's previous selling pressure, if you see a strong reversal off of that, that's what that is the so-called smart money, big money, or whatever you want to call it, institutions unwinding their positions, their long positions, and that alone will push prices back down. So there doesn't have to even necessarily be any short selling. It could simply be unwinding long positions because so much money has been pumped into the market down these lower levels. And hopefully this will become a little more clear as we look at volume and things. It's not a perfect picture of what's happening or what will happen, but it can at least give us some indication, as I mentioned, when used in combination with other tools like trade trend or momentum indicators or things like that. So any questions there on the S&P, and we'll look at the NASDAQ here too as well.
Nope, nothing yet. You can keep going.
Okay, have a drink of water. Okay, so a similar picture on the NASDAQ. So major floor in the NASDAQ, and we talked about this again on, I believe the last or the one before our live session. So there's a double bottom. Was that Richard?
Yeah, it was last week.
Last week, yeah. So double bottom here, 13,000, right? And we talked about how that was going to be strong support. Got the buying pressure off of that. And again, good news on the move today, because we got through a very, very strong resistance level. And you know, I'd like to call it 14,400, but you know, close. It's not exact. But you can see there buying pressure from back in late September, and strong resistance on the first bounce from the January sell-off. Couldn't get through it, came back down, double bottomed. Saw a couple days of closes around that level, and then finally today, gapped open above due to overnight futures trading, and then closed. By the way, the close today very close to the high, so that's bullish, right? So when we see closes near the high, you know, eventually we're going to see a reversal day, and that's where we trade above that high and then reverse back down, and everyone gets trapped. But and the word of caution is we've seen that you know, 4 or 5 days now. But when we see bullish closes near the high of the trading range, that often leads to further upside. So again, used in context with the support and resistance. So the good news is we had the close near the high today, and we opened and closed above a very strong resistance zone, or I'll even call it a level, because it's, as you can see here, been very closely obeyed right around 14,400. This was a little bit higher, but a lot of consolidation there in late January, early February. So this is good news short term. Now, more medium term, 15,000 is going to be our strong resistance, but also because we need to look at this as more of a zone, and I suspect it will be. So we've got roughly between 15,000 and 15,200 on the NASDAQ as a zone. All right, so we've got obviously this resistance zone. We've got the kind of hanging man candlestick here from early February. We've got resistance from back here in September, broken here in mid-October, retested just a few days later. Also served as support here. So 15,000 to 15,200 is our level to be looking at. So if you're trading tech stocks or the QQQ or the NASDAQ, or and you're already in a long position, and there was one here from Trade Trend 4 days ago, triggered 3 days ago, that would be a level to be watching for resistance and potential profit taking on long positions, or unwinding, scaling out of long positions with the hope that maybe the buying pressure continues up into 15,200. But these are going to be our major levels of resistance on the NASDAQ as this buying pressure continues. So for now, and let me actually clear all this out because there's one other thing. There's a little blip here from early October. So whenever you see these, like, I'll just draw the line here. Whenever you see price move really strongly off of a turning point, so you can see here that kind of went up and then back down, and then it was off of this 14,000, let's call it 600 or 550, that price went parabolic. Okay, so anytime you see that, mark that level because it's really significant. And then when you see like today, price close above that level from way back in October, early October, so we're talking, months ago, the market never forgets, and we closed above it. Right. So there's two things that can now happen. Price is going to keep moving up into the levels, the zone that I just talked to you about, the 15,000 to 15,200, or this is going to be a fake out and there'll be selling pressure back down below 14,600. So that can give you a good indication of what could happen near term and where to place, profit target levels, where to maybe be more aggressive shorting if this ends up being a fake out of that 14,600 level. But basically, I do all of these on a closing basis. I'm not where a lot of people get fooled is there's volatility, and we'll look at the VIX now. When the VIX is elevated, there's volatility in the market. People will panic intraday while the market's open, and when you see wide ranges and highs and lows, people will often, for instance, take the topic we're talking about tonight with these levels and go ahead and short when the market's still open, and then they'll get tricked and faked out intraday, and then it will just go back to close the other direction. So that's why I don't put a lot of weight in intraday ranges, highs and lows, because of that reason. But the real weight should go into closing prices and the range at the end of the day after it's set in stone. So just, I always urge our members, don't get too caught up unless you're really day trading. If you're more swing trading or longer term investing, then don't get too caught up in the intraday stuff. We want to see where this closes, especially with so much volatility. And the VIX has retreated a lot. And this is something else we talked about last week on our session about the strong resistance zone between 35 and 39. And we talked about how that, in context with the bottoming of the S&P, was a good indication we would see the rebound in the markets, and we did. So this and really emphasizes how crucial it is to use the VIX in combination with your analysis of the major indices. So this zone held. We had a lot of resistance and reversals out of this zone, and so that is our timing indication that that there's again in conjunction with the double bottoms on the major indices that there's going to be a rebound, that there's the selling pressure is over, and institutional buying is going to come in and push prices back up into the resistance zones. Okay, so hopefully you guys can visualize this and use it for future opportunities as these things play out in real time, because it's an incredible timing tool. And then I also, in past sessions, how we've talked about using the buying signals from trade trend below the 20 level on the VIX as strong warnings of a sell-off in the indices. And we use those more, again, below the 20 level, but also more as the sell-off warning if we're long the market or in long positions, or we want to hedge and protect long positions or initiate short positions. But we don't use the sell signals quite so much on the VIX unless we're up in a strong zone here, and so they might come in a little bit after the VIX leaves the zone. But there was one here around, let's see, March 7th there. So that's a good indication that the VIX will strongly retreat. I prefer to really use the price zone and resistance as the stronger indicator, but it's kind of a added confirmation to me that there's a greater likelihood of a strong retreat back down in the VIX, which of course is inversely correlated with the S&P, and gives me more confidence that I can go in and buy, in the broader markets with the expectation that they're going to be moving up, and you'll generally see these come in after spikes, but again, more confirmation that I identified the resistance zone versus using it to time the reversal in the S&P. All right, so we'll pause there, and then I want to talk a little bit about volume. And so again, the question from one of our dear members was that, how do we identify, because a lot of the major moves in the market are not driven by retail traders, unless you look at like recent cases of like meme stocks with a GameStop and things like that. So obviously it's been demonstrated that if enough retail buyers come in, they can drive prices up significantly. But we're kind of talking more about broader markets or larger cap stocks, where it would take a lot more volume and buying or selling pressure to make a significant move. So generally speaking, and not to mention that chat room retail traders are not aware of a lot of the stocks and things that are out there that might be worth buying or selling. So it's more of a hyper-focused, irrational, kind of hyped up situation that might be extreme but short-lived. So when we look at more extreme, significant buying or selling pressure, it's mainly going to be from large institutional investors. So Richard, if there are any questions on the VIX or the indices or support and resistance, we can go ahead and take those. Otherwise, we can switch over to our topic for tonight, which is using volume.
No, I think you can go ahead and move on. Bill said that Jillian has been updated.
Oh, great. Yeah, I'm just refreshing now. Good. So there are a lot of different volume indicators, right, on charting platforms, broker platforms, etc. And we're going to look at a few of those, but the most common one, of course, is just daily volume, right? So you can add a volume indicator, and a lot of charting platforms are defaulted to that to show you the level of volume in a security. Now, this creates some challenges, and it can give valuable information, but it might be difficult to use it as a standalone indication of anything. So this isn't pre-planned. I'm just kind of spotting this off the cuff, but like there was selling pressure back in mid-December last year, right? And you see when on almost on the day. So the day before we bottomed, before we made a strong move back up in the S&P, there was a huge spike in volume, right? So that would tell us, well, at least on that day, that price was going to potentially continue to go down, but then it wasn't sustained, right? It bottomed, it bottomed and reversed off of this 45.50 level. So that's why it's so important to use these tools with the exercises that we've been doing with support and resistance, and with momentum algorithms like trade trend, because that's really what's is going to give us a clear picture of what's occurring. So that's kind of the most commonly used volume indicator. Is just the volume by day. And the way that the charting shows it is when you have an up day, and this is where the kind of trouble comes in with daily volume. When you have a close up on the day, the volume is going to show as green. And when you have a close down on the day, it's going to show as red. But that doesn't necessarily mean that that there was more buying or selling, because often when you see a red, like look at March 14th, where you see a spike in red selling volume. Well, we don't know it's selling volume, but a spike in volume that's red correlated to a move down on the day, then you might suspect, well, there was an increase in volume. The market cleosed down, so it was probably a lot of sellers, and maybe it was, but it just doesn't give us enough information. And clearly here there was the bottom that we had previously looked at on the S&P that ultimately resulted in the strong reversal to the upside. So that would have not been really very helpful to us by itself. So there's some other types of volume that we can use besides just the daily volume that most charting platforms or broker platforms default to. And there's a lot of them. So the two others that I think are probably the most beneficial and helpful when used correctly are on balance volume and volume. On a lot of platforms, there's an indicator. It's called like volume profile, or basically it's volume by price. And those can actually tell us, and we're talking about kind of more, looking at daily charts and looking more, medium to long term. We're not talking about intraday trading. For that, there's other indicators like VWAP, or volume weighted average price, that make more sense. And in fact, and maybe we'll get into this more in another session, VWAP, volume weighted average price, is actually truly used by hedge funds and institutions that are trying to move a lot of money into a security. And they use VWAP which is an indicator, and you can get it on here on our Zillion platform. Just type in VWAP. It is actually used to help them buy without messing up the price of the security. So oftentimes when a lot of money is moved into a stock, it will move the price too much, and it causes problems for their position if they're scaling in, because they don't want to move the price too much, have it go up, and then have to buy more of their position at a higher price. So what a lot of funds do that move a lot of money into a security is they'll make sure they're buying below the VWAP, and then if they're unwinding a position, that they're selling above the VWAP. So it doesn't, because it's volume weighted average price. So it's kind of like a moving average, but it's also incorporating volume. So they're buying when price is below the kind of the fair value intraday for the security, and conversely, if they're selling, same thing. So VWAP is kind of more intraday. So that's also a good one, but we'll focus more on balance volume, because that's going to give us kind of a bigger picture, and then volume at price. So kind of the theory behind on balance volume, and let me actually just add it here. And then I'll take out the standard volume. keep hitting the wrong button. There we go. Okay, so the theory behind on balance volume is it's kind of was developed to distinguish between smart money, so institutional investors and retail investors, because as we've seen with like the meme stocks and stuff, retail buying can move prices, but it tends to be shorter lived, more dramatic, less reliable in terms of where the security is actually going to go. So basically, like, if large funds begin to buy into a stock that, for instance, retail investors might be selling out of, you may see volume increase, even though, price doesn't move a whole lot. So the trick is to get kind of a bigger picture of what's happening. And what we're looking at with on balance volume is, is the trend in the volume institutional buying versus retail buying. And one way to do that is like with momentum indicators with divergence. So if you see a divergence between the volume and the price, we often see big moves off of those divergences. So let me see if I can kind of spot something here. So I think probably the best way to emphasize this and demonstrate it is to use, so kind of look at the on balance volume as the, in the same way we look at a price chart. So we want to use support and resistance levels, because ultimately I think, we want to look at it, how it's impacting buying and selling, and whether or not, the big money's coming in and buying at a certain price, and use that as forward-looking information, right? We don't want to find out after the fact that, the big money moved in. So this is a good example here on this support level. So again, key emphasis here is use this in combination with our other tools, and especially support and resistance. So if we're looking at on balance volume, and we'll just use like the recent 4150 level that we've been talking about, where there's been this bottoming and strong buying pressure off. So we want to look at on balance volume, and what we want to see is support and resistance also on balance volume, and that can be our indicator that that there's bigger money coming in and buying and driving prices up. So again, see here the 4150, and hopefully you guys will start to get the picture as we combine all these things together, and we see them line up, that they provide a really powerful window into where price might go in the near term, and they not only do it accurately, but they do it timely, so that we're not finding out after the move's already taken place. And so so you'll notice here that as price was going up here, when we're in this really nice strong uptrend, on balance volume was actually, even though it was trending up, was finding resistance around this really large number that starts with a 4. And by the way, this will be different for every security. It's based on obviously the volume in that security. So we can't really say that any specific volume is significant. It's all relative to the security. But what we can do is we can look at that, and often when we see these resistance zones in the context of an uptrend, that actually can tell us that and it's kind of opposite to what you might expect, that buying might actually be stalling when we break through a resistance. So generally, when we think of a stock or something, when we break through a resistance zone, we expect price will continue to go up, and it often does. But with on balance volume, so there was selling around this level, and then we finally broke through it in late June and continued into the uptrend. But that's actually a bit of a caution. And then once you start to see on balance volume hitting resistance over and over again, and that happened here in November, December, that's our warning. And as it correlated to these highs in the S&P, so that's our warning that the market's topping. And then as we see on balance volume reverse off that resistance and come back down, that's where we want to start looking for institutional buying. And remember, if we had done our homework and had used OBV here, mapped out the resistance, then treated as support as the market topped out and turned over, we knew that as it approached this level, that remember, because we had three major, really four major touch points over the course of a year, that as it comes back down, that's where we want to start to look for, number one, the VIX to reverse. If it's spiking, which it probably is, that's where we want to look for buy signals from trade trend. That's where we want to look for strong support levels and reversals off those levels. And then when we use that as an institutional buying indicator, that's our clue right there. Okay. So that's one way to do it, and not the only way, but on balance volume is probably the best indicator for institutional buying as it relates to retail investors in terms of chart analysis. So there are other ways, and for instance, I own a hedge fund, right? So depending on the hedge fund's AUM, assets under management, and this, I think, it's not all too recent. I think like back in 2011, the SEC passed this, where hedge funds that have over $100 million in assets are required to disclose their holdings through an SEC disclosure called a 13F filing. And basically what they have to do is they have to reveal all of their positions in their fund. So that would seem to be a very reliable indicator of institutional buying. But the problem with that is the requirement is that they have to disclose it around 45 days after the end of each quarter. So it's only done quarterly, and it's 45 days after the quarter. And so obviously there's going to be a huge lag, and we don't like lagging indicators, right? We want forward-looking indicators. So for that reason, using a 13F, unless you're really savvy on the fund that you're analyzing, and maybe it's Berkshire Hathaway and they're buying and holding for 30 years, that might have some value to it if you have the same time horizon. But other than that, is a short or medium or swing trading indicator, 13F filings are not very reliable. Not to mention that funds have to disclose their open positions at that time, but you have no idea where they anticipate selling it, if they are using hedging. So maybe they have like a long position in the Qs, and it's an enormous position, a huge position in the QQQ NASDAQ 100 ETF, but you may not see that along the way they're hedging it with put options, for instance, or they're selling calls against it, or all these things that with derivatives that come into play that you wouldn't be aware of in a 13F filing. So not to go belabor that too much or go on about it, but just something to be aware of. They're available to the public, but not really a great tool for timing unless you're a really long-term buy and hold investor. So I think on balance volume is a good tool to help. And in terms of analyzing again, using support and resistance in combination with the support and resistance on the chart. So when you see levels that are serving as resistance, and you want to look for future buying opportunities, you want to wait for OBV to come back down into that level on a sell-off, and then watch for it to, as it did right here, watch for it to hold that level and reverse off of it, because that's going to give you a pretty quick indication. So you can see, like right here, as price rejected, even though there was still selling, and your standard daily volume indicator would have told you that they're still selling. But look what happened on OBV. It bounced off, and the next day it did come back down. Price did on the S&P, and then hit that level. But then look what happened. There was buying that came in, and so that's where you can really get the clue, because it really serves as a momentum indicator, truly. And when we look at the accumulation of buying volume, that's going to tell us what the bigger institutions are doing, the money that's going to actually move prices significantly. So that's OBV. So any questions there on OBV, and then we'll look at the volume by price.
No, I think that's super cool. I mean, there isn't any questions specifically about it, but we've been doing these for like 6-7 years now. I don't remember us really going in the volume this deep before. So
yeah,
you guys are on the night. It's a really kind of a big treat.
Yeah,
you get this whole nother look at confirmation and different things to look at in order to determine what you're going to do in the market.
Yeah, and frankly, I'm cautious to get too into volume, because I don't want people to take it as a standalone indicator, because oftentimes, like when I teach things, students may be more inclined to use that as a standalone indicator. So I'm very cautious. Hopefully you guys notice that I'm trying to show you this in the context of the other things that we teach, because I don't think it's gives us enough information to use as a standalone tool to make a decision. But I do think it's important. And certainly, like when you're looking at individual stocks, this will probably even become more valuable. But I think it is too with the broader markets. And it can help us, identify tops. If you see, a long period of time on a chart, like if you see markets reaching new highs on, let's say, over the course of a year, and then you see on-balance volumes start to go, from trending up to like this.
Almost like divergence.
Yeah, exactly. It's basically divergence. But yeah, as you see it stall out while price is hitting new all-time highs, that's a very, very good clue that institutional buying pressure is ending. And but at that point, it's gotten so extreme and so big, if hedge funds, pensions, retirement funds, all big, the money, big money management houses, Morgan Stanley, have built their positions up so much at that point that all it takes is unwinding those and not even going net short to create a very significant market correction. And so that's what we're seeing here in this picture is, so when you see OBV hit, let's say 1 year highs, and you see markets hit new all-time highs, that's a very good clue. And so you want to look for that resistance there, and then a move, and you can really get granular with it and look at the support here. So when you're seeing these tight ranges near all-time highs, also look for the support, right? And then when price breaks that support, it breaks out of that range, it might be, you probably won't be too late, because it's, but it's a little bit of a, you want to just be more cautious here. If you start seeing double tops and stuff, But even right here, so basically like right at the beginning of January broke to the downside. It wasn't far off from the last all-time high in the S&P that it did that. So that, standalone is a good indicator. But again, use it in context. So obviously we got the sell signal from trade trend here. It actually coincidentally, even though the trade trend algorithm doesn't use on balance volume, coincidentally, and probably rightfully so, gave us the sell warning there as well. So just more confluence that a market top and a sell off. So that's a valuable tool as well.
I guess I just have like two other questions about
Yeah.
before you move on to the next one. Chris is wondering, does this work mainly with more higher volume stocks or
No, because really you'll see, what you want to look for is, I mean, I guess I say that with caution. Like, yeah, it's not gonna like a penny stock. I mean, there's no hedge funds buying penny stocks. If they are, they're probably gonna, won't be around next year. So yeah, to some degree you want to take into context what the security you're looking at. Certainly if you're looking at like Microsoft or Starbucks or Costco or a Netflix or a Google, yeah, those are going to be the on balance volume is going to give you, because it's a large cap stock, so it takes a lot of money to move the price. Obviously if you're looking at a penny stock, it's worth very little. The market cap is tiny, and it doesn't take a lot of buying to move the price. That's why you see such large fluctuations in pink sheets or penny stocks. So yeah, take it into context, but otherwise, anything that's listed on the NASDAQ 100 or the S&P 500 or the Russell 2000, I think on balance volume is a good indicator of institutional buying and selling.
And then before you leave, can you show March 2020 with OBV right now?
Yeah. I don't think anyone's ever asked to look back at March 2020. I'm assuming just the S&P.
Yeah. They wanted to see that big sell-off and recovery.
Just give this a minute to load.
While you're looking at that, can it be used with cryptos?
Let me zoom in a little bit. Good question. I am going to answer that cautiously. I don't know because I don't trade crypto directly, and I don't know enough about. I would, like any regulated crypto, like a crypto ETF or futures contract. Yes, because the volume can be those are regulated securities, and the volume can be tracked accurately. I don't know enough about direct buying of cryptocurrencies and how the volume is tracked there to answer that. I would check with whoever, if you're buying cryptos directly, whoever is the broker is or the mediator that fills the order, to see if they're tracking all volume in that cryptocurrency from all sources, because that's the big. I mean, that's always a downside with trading like an unregulated security or something that's at least not on a central exchange, is that it's very hard to track a lot of that stuff. So if you want to look at that, I would check with whoever you're using to trade the crypto to see if it's reporting all of buying and selling volume before you would rely on it. Let's see here. And actually, this is a good thing to look at because with OBV, it differs with with the circumstances of the sell-off. So like when you see a very severe drastic sell-off, you may not see the ranging resistance that you do with, zoom in more here, with a scenario like January of this year, but still use the support and resistance. So let's see. Kind of zoomed out here, but hopefully you can see this. So it's still similar. The only thing we didn't get, so again, at that time, all-time high in the market. We had broken through resistance. So again, I'm really zoomed out here just so you can see the whole picture. But if you were to zoom in, you'd see there's our resistance. There's the break. We didn't quite get up there, but going back a little bit, there was some there, some there. So there's the breakout. And so here is, so the sell-off, that would have been hard to time. Although if I zoomed in a lot more, you would have seen a little bit more of what I just emphasized on the current year's chart. And so, but see, there's the price coming back down into this resistance zone after it had broken out. And you can see here that as it retested that resistance, that was where institutional buying came back in. So again, for me, great information, not enough not enough information to tell me to buy, because probably the institutional buying is not using that as a standalone either. But when you look at it, in the context of previous support, that's where it becomes valuable. So if you find the confluence between OBV breaking through resistance, coming back down, retesting the support, and markets selling off, and then hitting a price resistance level, not just an OBV resistance, support level, not just an OBV support level, and then a rejection, that's a great indication of institutional buying. And was there any others on that one?
No, that's it.
Okay. So that's OBV. Again, just like anything else, play around with it, test it, use it, look at other securities, and then use it in conjunction with other tools, right? So I think as we looked at in this, we had 3 big sell warnings near the triple top from Trade Trend. So use it with Trade Trend, for instance. Like I'll use a lot of these things with the Trade Trend warnings near major levels. So when you're using it with support and resistance, with the Trade Trend signals, and then looking at things like OBV for institutional buying and selling pressure, and you find those align, those are going to be your high probability opportunities. Okay, so then the last one we'll look at real quick is volume by price. Oops, let me get back out here. And in the Zillion platform and in TradingView and things, it's called volume profile. And so it's basically going to show you, and we actually, I don't know if it was Moshi or somebody asked about this last week. It's going to show you volume at price. And this is also a really good one for indicating institutional buying and selling pressure. And basically what it's telling us is, and there's 2 things we want to look for. It's telling us how much, and to me, this is much more valuable than knowing the volume for the day, like we looked at the very beginning, and we kind of quickly got off our chart and discounted for a reason. Volume by price is actually going to tell us how much buying or selling was at an actual price and not just on any given day. And hopefully a light bulb just went off for everybody. That's what we're doing when we're looking at supply and demand points is we're looking at price levels. We're not looking at day levels. We're looking at the horizontal axis, not the vertical. So we're not looking at what happened on any vertical daily time frame. We're looking at what happens at a specific price and how does price react to that level. And that's what the volume profile or volume by price does for us. It shows us how much buying or selling was at a level. So again, not in and of itself, not enough information to make an informed trading or investing decision, but when used with the other things that we've covered, potentially very valuable. And once again, so what we want to look for is, it differs from buying and selling. So, also very valuable when used with OBV, on balance volume. So with buying, when we're hitting new all-time highs in the market, we want to look for a big decrease in volume at a major level. So we're looking at 4,800 century mark, major resistance, trade trend sell warnings, major drop in volume, and specifically buying volume that was outpaced by selling volume. That's good information. Now, again, in and of itself, not enough to make a decision. But in that context, very valuable information. Now let's look at the recent sell-off. So again, here's the, actually not sure why the platform put that 4177.94 level in there, but it's related to the volume profile indicator. So there was that support level here that right where the red line is. I mapped it more at 4150 right here, where we identified on balance volume had broken through resistance, come back up, retested as support. We identified that we were getting trade trend buy warnings as price bounced off. And in terms of volume profile, we saw a big increase in buying at around the 4,200 level. So all those things as they coincide give us the indication that this could be a turning point in the market after a sell-off. And of course, in hindsight now, we know that to be the case as price bounced off. So basically I kind of look at volume profile as support and resistance. Often when you see these like extreme volume profile levels, you'll see them coincide with major support and resistance levels. So it's kind of like a self-fulfilling prophecy because hedge funds, I mean, this is really the true indicator that hedge funds and big money are watching these levels so closely, which is why I emphasize it so strongly, is because all this volume that's coming into the market at these levels didn't exist before whoever's pumping all this money into the market identified the level, right? So it has to be a self-fulfilling prophecy. And so, but you'll often find them at these major support levels that we've already mapped out without even using the volume profile. You know, I don't even need to use the volume profile to identify these levels, but not to say it's not valuable for future information. So like we can see there was a lot of volume around the 3,900 level. So if price ever broke this 4150 support, there wasn't a lot of volume at 4,100, although it was a lot more than at 4050. There was more at 4,000. I'm surprised there wasn't more than that, frankly, but there was a lot of volume at 3,900. So I'm going to then look to see, does 3,900 match up with a horizontal support or resistance area on the chart? I see some over here. I'd have to zoom in more to analyze it better, but that could be a support level. So the volume profile basically can help us confirm that we've identified a support or resistance level accurately. And it has its limitations like other tools. You know, now we know there was virtually no buying up at 4,800, and of course, price sold off from there. But that's good to know. If price ever gets back up to 4,800, we know now that 4,800 was not a strong buying zone. for a reason. So we would look at that as a resistance area, not as an opportunity to start buying, just to have, the smart money come in and reverse the market on us and, knock us out of our long positions. So if you want to, I think, kind of think like a hedge fund or the big money, this is a good way to do it with the volume profile, because you can see the extreme spikes, and those are basically going to, and those would be off to the left horizontally, right? Those are going to tell us where there might be a support or resistance in the market, or where in the instance of an all-time high in the market, or if we're looking, let's say, at an individual stock, where there might have been selling pressure. If you see that all of a sudden dry up, that's going to tell you that for one reason or another, the market, the big institutions did not see any value in buying at that level. So it's kind of a handy tool. I mean, you don't even need to know all the fundamentals and balance sheets of a company. You can just see where there was buying and selling at a specific price with a specific security. So again, just should be used in context with other tools and things, and obviously the purpose of our sessions and in terms of how to analyze these things. But again, thanks for the suggestion to focus on the topic tonight. I think it's valuable. I think it's a useful tool. And I think when used in conjunction with others can be very valuable. So thanks again for that. Please always share your suggestions or requests for topics for our live sessions. We're happy to cover those. So I'll go ahead and pause there and see if there are any questions to wrap up, or any stocks or tickers that we want to look at. Even though we did run a little bit over, I'm happy to stay on for a few more minutes to do that.
Yeah, Ed's asking, the volume by price would be different for different time frames. Any guidance for what time frame you would kind of weigh the heaviest?
So it's actually going to be relevant to the time frame. So it's like kind of, what do they call it? Like fractal. So it doesn't matter what time frame you're in. It's going to be relevant to that time frame, but you don't want to use volume by price information, or even OBV by off of a 5-minute chart to make a trading decision off of a daily chart. So you just want to make sure that you're using the indicator in the time frame that you're trading off of, because volume by price on an intraday chart may not indicate anything on a daily chart unless you're using them in conjunction. And maybe you've already identified buying pressure at a specific price on a daily chart, and you're just trying to fine tune an entry on off a 5-minute chart, then you would still want to use the information from the 5-minute chart.
Gotcha. And can you look at AMGN?
Sorry, Amgen?
Yeah.
Yeah. I'm actually going to remove. It looks like we broke through some strong resistance areas in Amgen, but also have some a little bit further up. So just from a high level perspective, first major one I see is down here. I see very strong support at 220 and strong support at 232 and strong resistance in the 244, 248 zone. So this, because there is an open buy from trade trend here, would be the resistance zone. looks a little toppy, definitely rangy. Not real well-defined trends. So yeah, I would say, yesterday, let me clear this out and zoom in a little bit. Look at more short term. We're getting some strong rejection off 240. So there's a strong move up off 240. So this would have been the buy I would favor more because it was off support. This was a buy signal into resistance. So I look for buy signals off support. So this is a good signal right here. And this is one I would have ignored, unless it was a very short-term trade. Obviously, got a nice move off of it. Entry would have been around 36.50 to 37. Move up into 240. So good for a short-term, one-day trade, but not one for more of a swing trade, because I just see a lot of topping and resistance right around this 240 to 244 zone. And then again, if we back out of this, very strong overhead resistance, kind of around the 250 level. So I think the upside potential on Amgen is fairly limited on a technical basis, but might have a little bit more room to run. But I think on any further move down in the stock, there could be buying opportunities off some strong support levels that I see down here around 220 and 215.
All right. The last one is NVIDIA.
All right. Yeah, once again, so nice buy signal here off of a support zone. This one triggered March 17th. If I were in a long position on NVIDIA off this signal, I'm not. This would be where it closed today and yesterday, roughly in this zone, would be potentially a profit taking level for me around 270, because I see very strong resistance there. So I think, this may not have a lot of room to run. If it breaks this, then and I had a long position still open, or let's say I initiated one off the buy signal down here, I would have looked at taking profits on half the position around 270, kept the other half of the position open, moved my stop to break even, and then if it broke this 270 level, because there's such strong resistance there, then that if it can break that and sustain it, so if it closes above 270 and then comes back down and retests, then I might even add to the position up into higher resistance levels. So 290, 310 would be, if it can break through 270, would be our next two levels of resistance to look at, potentially profit taking in a long position, or potentially bearish positions off of 270 if this level doesn't, or if it holds and it doesn't break, then we're in a range on NVIDIA. So bottom of the range is at 210. So that could be, this becomes a ranging play. This could be a nice range to work with between 210 and 270. We got a lot of support down here at 210 and a lot of resistance at 270. So this is one kind of keep an eye on and see how it racks to 270. as the closest level that it's going to be toying with here, as it already has the last couple of days. See the big move up off 210, and then the stalling at 270. And then if it breaks through 290, and if it breaks through that 310, if 270 holds again, could be a potential short opportunity down into the 210 level as more of a ranging play.
All right, that's all I got.
Cool. All right. Let's see here. So no other questions in general or anything that we need to address before we wrap up?
No, looks like we're good.
All right. Well, thanks everybody. Thanks for the topic recommendations. Continue to send those in if there's any strategies or markets or indicators or anything you guys want to focus on any future sessions. Just shoot us an email, support@altostrading.com. You know
what? Hey, Jeff, before we hop off, maybe you want to tell everybody about tomorrow, the morning.
Oh, yeah. So we are presenting, or I'm presenting at the, and Richard will be moderating at the Money Show virtual event tomorrow at 12:45 Eastern time. Is that right, Richard? 12:45?
I think it's 10:45 Eastern.
I might have put it in my calendar wrong. I thought it was 12:45.
Let's see. Yeah, it's 10:45 to 11:25.
Eastern?
Yeah.
Okay. I'm gonna have to wake up earlier, I guess.
Gotta get up early, man.
Yeah, Shaw, they're asking for the link.
Just put it in the chat.
Okay, Richard put that in the chat. Yeah, so we'll be presenting tomorrow if you guys want to join. It's I believe 30 to 45 minutes. We're also going to hold a Zoom event after. So if you join and want to join our free Zoom session afterwards, you're welcome to do that. So I hope to see you guys there tomorrow. And then if you have any questions in the meantime, just shoot us an email. And otherwise, we'll see you. Let's see. We should be on for next week. We don't have any conflicts next week, I don't think, Richard, do we?
I think you're going out of town pretty soon, aren't you?
Yeah, I'll be back Monday. So we'll be good for Tuesday.
Okay.
Yeah. All right. Yeah, we'll be back Tuesday, guys. So we'll see you next week if we don't see you tomorrow. And let us know in the meantime if you have any questions. Thanks, everybody, for the participation. Hope you got a lot out of it. And we'll see y'all next Tuesday.